This conference will now be recorded.
Okay, so yesterday we began the cash cycle where cash is placed in the bank to start the company. That cash is used to purchase inventory, set up accounts payable. The inventory is sold, and the once being sold, journal entry 15 is made to make the sale, journal entry 3 to collect, then we pay off our bills, and hopefully we have more cash in the bank than when we started off. So that's our objective as we look at the cash cycle and we review various accounts. And we said one of the key things is controlling cash. There's a need to control cash. So you have the internal control process, a controlled environment, control activities, information communication, monitoring cameras, etc., and risk assessment. So all of these have to be a part of your internal control as you operate in your company setting. And we have Sarbanes-Oxley Act, as a lot of companies did not have a lot of internal controls at the beginning of 2000. And so what they did was to require the president and chief financial officer to certify that the financial statements are accurate. And once they make that certification, if the statements are not accurate, then they can more easily be sent to jail because they've signed a statement saying that. We looked at bank reconciliations yesterday, and we said a lot of time the bank statement will have one balance, the cash book will have another balance, our T account. And so we go through a reconciliation process, reconciling to the correct balance. On the bank reconciliation, we're going to add deposits and transits and outstanding checks that the bank don't have to get a correct balance. On our company's book, we're going to add credit memorandums and deposits made by the bank, service charges, NSF checks, reduced in our accounts by the bank. And each time we're coming up with a correct balance. What is the correct balance? And so, and we looked at this problem. So hopefully you've looked at it. Are there any questions on bank reconciliations? Any questions by anyone?
No.
Then we move to the statement of cash flow. And so that's a comprehensive problem. So since the 8 students didn't have any problems, I was assigning them this complex one eventually. Okay, so they can knock that out. Let's get to the cash flow statement now, which is our final statement. We prepared an income statement, statement of retained earnings. The income statement shows the operating income. The statement of retained earnings shows how much of the earnings have been retained in the business. The balance sheet looks at what assets the company has, what are the liabilities, and what's the stockholders' equity. And of course, assets has to equal liabilities plus stockholders' equity. So those 4 statements are made and they're based on accrual basis accounting. That being the case, we still have got to check to make sure we got enough cash. We have to make sure we have enough cash. And so when we're running a business, a business is supposed to generate cash from operations. It's actually supposed to have a negative number in investment because it's expanding. It should be at some point in time paying off liabilities, paying dividends to owners, and the cash should be increasing. And so we use this example and we said that An example of a good company would be operations provided $1 million, and 400,000 was then spent to expand. Another 200,000 was spent on paying dividends and reducing indebtedness, and we still increased cash by 400,000. That's kind of the ideal situation that we'd like to see in a company. Once again, because we're using accrual basis accounting, we have to ensure that we got enough cash to pay our current bills. And so that's the purpose of the statement, to see if the company is generating cash. And that cash has to come from operations. Operations is like your salary. A company is supposed to generate cash from operation. Macy's is supposed to generate cash by selling clothes. Macy's is not supposed to be generating cash by selling its stores to other people, selling vacant land. That's not what they do, and that's not continuing. And Macy's should be paying off indebtedness rather than borrowing more money. And so when the cash account changes, we got to look at why it changed and make sure that the company is going to have long-term liquidity. When this statement is not prepared and evaluated, liquidity problem is going to occur and the company can go out of business. And probably more importantly, companies can engage in unethical practices, accounting practices, and the statement helps detect those if it's been prepared and looked at. And so it is a key statement. We just touch on it here. We look at it more in principles 2. Okay. And what I told you was that for part 1, cash flows from operations, we're looking at sources of cash and uses of cash. And so in this first part, the source of cash operations involve sales for cash, sales on account, and collection of those sales, short-term loans, and then income earned in advance. All of these items are relating to what the company normal operation that it's supposed to be doing. Then we look at purchase of current assets, payment of current liabilities, payment of expenses, various refunds, and we want to determine, was this number positive? If this number is positive, the company is doing well. If the cash flow from operations is not positive, then the company has a problem. And of course, companies publish cash flow statements. If you Google a company that you're interested in working for and investing and it's publicly traded, it has a cash flow statement, so you can look at this, but most people don't. Cash flow from investments. This section looks at long-term assets. Did we buy or sell long-term assets that have a life longer than a year? We're not in the business of doing that. Macy's is not in the business of selling land and real estate. It is in the business of expanding and adding more stores in virtual capacity and expanding to internationally. And so we're looking for this number to be negative. So this is in part 2 are long-term assets. So current assets and current liabilities are in part 1. Long-term assets only are in part 2. Part 3 consists of, on the source side, cash contributed by owners and long-term loans. Short-term loans up in part 1, long-term loans in part 2. Then we look at repayment of long-term loans versus receiving them, and then payment of dividends, 10. So for you personally, a student loan in general is a long-term loan because you don't have to pay it back, typically until after graduation. But on the other hand, your credit card debt is a current because you got to pay it right away. And then sometimes if your loans are starting to become due, then they move it to the current category. And the key thing is when we add operations minus uses, if the sources exceed the use, then this will be a minus part 3 to come up with the increase. And we want this to be positive. We want this to be positive from operations. We prefer that this be negative because the company is expanding. We prefer that this be negative because the company is paying dividends to its owners and paying off indebtedness. And yet we still want a total positive source of income. Are there any questions? And then I template it out in terms of how you do it. And we had this example, and we looked at this example, and we showed where, see if I got a free template. So we show with the template, where you put these items. Which ones are in 1, 2, and 3 to get our amounts. And let's see. Let me go to my problem. So in your cash flow homework, what you know is that, and the reason these problems are good, you have your transaction types. So that's there with the problem. So you can identify what type of transaction it is. And we said if it's 1 through 11, it's fine. It goes on the cash flow statement. If it's 12 through 20, then no, it does not go on the cash flow statement. And so when you have a transaction that's in that category, you scratch it. It does not go on the cash flow statement. Then this statement shows where each type of journal entry goes. It shows you which ones are in part 1, shows you which ones are in part 2, which ones in part 3. We add them all up to come up with our net changes in each part, total change, and net change in cash. So let's see how this is going to work on your homework problem. So did we get our homework problem done? Did everybody get the homework problem done?
Yes.
I haven't checked yet. Is there anybody who didn't get the homework problem done? Okay, so everybody got the homework problem done.
I didn't complete it. I'm still working on it.
Why are you still working on it?
Because I wasn't in class the day that we did it, so I had to read up on it.
Okay, so you have the reading in the video. So we said for each transaction, we're gonna say, okay, what's the journal entry type? So when we invest money into the business, what type is that?
1.
That's a 1. What part of the statement is it going in? 1, 2, or 3?
3.
Gonna go in 3. So we're gonna take the 200,000.
Hopefully I did it right. I wasn't here yesterday when I actually went over it. But
you always do it right, right?
I don't know. This is the first time I ever did this. So I tried. I mean, I watched the recording from yesterday and then did it like that.
So this is transaction 1. This is journal entry type 1. It's a source. And how much cash do we have?
200,000.
100,000. And so if I told you to do this, just gave you the statement and say, do it. And, so you can see why I had the journal entry types, and you learn those first of all. So you can kind of easily prepare the statement. So we're pulling this back together, and we're seeing how this comes together and why I work so hard with you on learning how to make journal entries. It all revolves back around to the journal entries. Then we purchased 20,000 in supplies on account. What type is this?
A 12.
So what we're going to do with this 12?
We're not going to use it.
So we're going to scratch it. Then we purchased 5 cars for 20,000 each, paying 10,000 down and signing a note for the balance. So what are we going to do here?
I used type 7 and 5, and it made it a location 2 and 3.
So when we look at this one, if I can get rid of these. See, we can break it down. So we bought an asset,
Yeah,
and the
which was
amount of the purchase was what? $100,000, right?
mm-hmm.
And a part of that purchase is going to be what?
Paid in cash for 10,000 and
Okay, so that's
borrow.
the type what? 7. That's a type 7, right?
Mm-hmm.
So this is the cost of the asset. Okay, so it cost 100,000, and we actually then took out a note for the balance to pay for this, which was what, $90,000. And so that becomes a type 5 in this case. So what we in effect did was to borrow 90,000 and added that to the 10,000 to get this purchase of 100,000. And so we're going to put the 100,000 in what part is a long-term asset? So what part is it going in?
2,
And then the note is going to go where?
3.
So hopefully, this kind of breaks this out. We could say the company spent $10,000, but that's not reflecting the fact that it has equipment of 100,000 and it owes 90. So for transaction 3, we're going to come in here, transaction 3, and this is going to be a use. So we said this is what, a type 7,
Mm-hmm.
and it was $100,000 in equipment that we bought. That's more useful information. But we're also going to come down here and put the 3 down here, and we're going to say it's a type 5, and we borrowed what, 90,000. So it nets back to the 10, but this is better information for us. That we got $100,000 worth of equipment, not 10, and we owe 90. That's just more useful information. So we look at that a little differently.
I have a question.
Yes.
So in this situation, the cars are just being looked at as equipment instead of purchasing the cars. Say it again?
It should be a car. I just was thinking equipment, but it should be car. Thanks for that. Then in number 4, we received cash rental revenues. Once again, a very good review problem. What journal entry type?
2,
What part of this cash flow statement?
1.
Number 1. So we're going to take this $500. So this is transaction 4.
Mm-hmm.
Type 2,
Yeah.
and the source is 500. So notice sources always on the right, uses on the left on here. So 1 through 6 is going to be a source. 7 through 11 is going to be a use. So this is pretty much well laid out for you to go ahead and knock this out. Paid rent expense of $50,000.
9.
So
Section 1.
type 9, what part?
1.
1. So this is an operating type item. So to make money, we got to pay rent. So 5. So this journal entry number 5 is type 9, and it's $50,000. So once again, on the use side, it's got to be 7 through 11. On the source side, 1 through 6. So it's pretty well laid out for you. Paid salaries of 100,000.
9.
9
1.
going to 1 again. So 6. Transaction 6. Another type 9. 100,000. Paid dividends of 20,000. What type we got? 10. What part of the statement is that going to go to?
2.
No.
I mean 3.
Yeah, the better one. So we look here, see this sheet, journal entry types, I got that there for you. Then this shows where they go, where the types go. So type 10 goes in part 3 of type 1 here. So this shows where each type go. So we look at the journal entry, determine the type. We come to this sheet, see where it goes. So it says it goes here. So this is transaction number what? 7? Was that number 7?
Yes.
So we said the type was 10.
Mm-hmm.
And how much were those dividends?
20,000.
Then we paid on accounts payable 25,000. What's our type?
I put type 8.
Type 8. So part of the statement
1.
that goes in 1. Once again, it tells us that type 8.
I
So
did have a question about that because on the thing it shows that type 8 is in 2 different sections.
current liability. Type 8 current liability. Type
Okay.
8 long-term liability.
Okay, that's what I wanted to know, the difference. Okay.
And the same thing when we borrow the money. If it's short term, it's up here. Long term is down here. So that was 25. So 8 was 25,000. And non-paid automobile expenses of 15,000.
Type 9, section 1.
Type 9, so that's going to be in section 1. That's 15,000 for type 9. Then pay principal on note payable 10,000 and interest of 5,000.
For
So
the
payment
notes,
on note
type 8.
is 8, but this is long term, so it's going to go in part 3. Okay, it's going to go in part 3. So the principal is going in part 3, but the interest is a 9, and where is that going to go?
Part 1.
Part 1. So let's see if we can take care of transaction. That's transaction number 10. See, we finished. So we're talking about transaction 10, which is 2 places. For the type 9 part, that was how much? $5,000.
Yes.
Then for the
It was 10,000 for the type 3.
type 8 part, now we're done. So now we want to see, okay, how much did operations provide? If we add up all our sources, how much do we get? If we add up all our uses, how much do we get? That 190.
Yeah, 195.
So from operations, our business generated at 500,000. It paid current type things, bought assets, paid expenses, etc. 195. So what's our net change in cash?
305.
So that's what we want to see, a positive number here. And in part 2, we only had one item.
So a negative 100.
Minus because so if the uses exceed the sources, it's a minus. If the sources exceed the uses, it's a plus. Then what about our final part? We're at 290.
Yeah, minus 30, close to 260.
So what was the total change in cash? That's 205 plus 260, 465. Is that right?
The hell?
Is that 465?
Yes, sir.
Okay. So that's all that's involved. So this is a good problem because we get to review our journal entry types. Then we have a very nicely laid out template so that we can come up with our cash flow change, analyzing these journal entries. Are there any questions? Are there any questions? So what you should have in assignments now is a problem. I think it's journal entry 3. I mean, cash flow problem 3. Get to work. Let's see if we can have that done. How long should it take you to do it? How long is it going to take, Zalandra?
How many is just one? Or a couple questions?
Pull it up. Go to assignments and pull it up.
Okay.
How many is it, Chris?
$15.
Okay, you got 15. And of course, you're only supposed to be taking 2 minutes per journal entry. We give you another 3 minutes since you got to move it somewhere. So we'll give you 45 minutes. 10:47. I'm going to give you till 11:47. So you got an hour.
Hey, what type did y'all put for number 14?
I don't know if that 13 or 19. I don't know.
Thank you.
Dominique, that big old dog you get.
I have two. You want to see them? Look, Cash.
Dog. No, ma'am. Hey,
Yes,
well, I sent you a message though.
them my children.
Yeah, you had them.
Any questions by anyone?
I have a question about number 13. I'm sorry, yeah, number 13. I was trying to make sure the type was type 14.
That sounds right. Is that right, Dominique?
Yes.
What part would it go in? What location?
So where's it
We
gonna
only
go?
use 1 through 11. We don't use anything under type 11.
Okay.
So that would be a scratch.
Okay. So those just don't go onto the bottom part of the chart.
No, ma'am.
Correct.
Okay.
I got confused on 5.
Well, let's just do them all right quick. Invested 10,000 into the business. What are we gonna do with that?
Type 1, section 3.
So this is a type 1, and that's gonna be in section 3. Then we cash receive or car own revenue.
2, section 1.
Section 1.
Type 2, section 1. Then collection of cash from corporate customers, 20,000.
15, so scratch it.
What's that, Chris?
Oh, you're not gonna use it. This is a type 15.
You gonna change it, make your answer wrong. Sound like a 3 to me. Collect.
That's a 1, right?
Not a 1, it's a 3. Oh, it's gonna go in part 1.
Yeah.
Well, I chose 15 because it say on account from corporate customers on account.
Collection of cash. You got cash.
Yeah, but you told us that anything that said on account was 12 through
Collected though, yeah.
16.
You're collecting
Number.
it to sale on account. It was a previous sale on account. So if that's what you did, that's fine, but you gotta go with we collected cash.
Okay.
What about number 4?
20.
Is that 4?
This is a
Put
4.
type 4.
This is the type 4. Income received. You got the cash.
Mm-hmm.
In section 1.
It's gonna go in section 1. Receipt of the short-term working capital loan.
5.
What's
Type
it
5. So where's that gonna go?
3.
You choose the wrong door.
It's not a 3. Let me see.
For type 5, I chose 1 for that one, section
Okay.
1, because it's a short-term loan.
Short-term loan. So, okay, so that's throwing you off a little bit. If it's a short-term loan, it's gonna be in part 1. The long-term is gonna be in part 2.
Appreciate the help.
Okay, that's why we're going over it. Purchase supplies on account. No, purchase supplies paying cash. The amount is what, 1,000?
I put type 7.
Type 7. Part 1. Sale of a 4-year-old Otto at Blue Book value of 4,000. That's going to be a long-term asset, so we got 4,000. That's going to be a type what?
6.
6. Where a type 6 go?
And 2.
Type 6 is going part 2. Paid on accounts payable, 5,000.
Type 8, section 1.
8, section 1. Paid rent expense of 3,000.
Type 9, section 1.
Paid dividends of 2,000.
Type 10, section 3.
Purchase supplies on account.
Type 12.
So we're gonna scratch that, right? Because we purchased it on account. So it's type 12. Okay. Car loan revenue earned from corporate customers. Earned.
15.
Type 15. And we're going to scratch it. Recorded depreciation. What type is that?
14.
14.
What we're gonna do?
Scratch it.
Scratch it.
Scratch it. Supplies on hand. What type is that?
13.
13. So what we're gonna do with that 13?
Scratch it.
Wait a minute. This is 14, so this is 13. So anytime we get above 11, we scratch them. And then record a bad debt expense. What type is that?
17.
What we're gonna do?
Scratch it.
See, remember the adjusting interest don't involve cash. So you only had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So you were only using 10 of the 15. So can you all finish this up now? See where we had our issues and errors? Be ready tomorrow?
You said we have a quiz at the beginning of the class tomorrow?
Correct. It will cover accounting theory and adjusting interest. Then you'll have another cash flow problem to do. Since some of you all are moving slow.
Tomorrow's Friday.
Yeah, I know. Y'all owe me a day, so just about
What?
everybody owe me a day.
Don't know about that, but okay.
Well, I'm just so dedicated.
Tomorrow be 110 points.
So what?
Can tomorrow be 110 points?
110 points. How's tomorrow gonna be 110 points? I think it's 20 points.
You want our Good Friday.
So what now?
I said, you want our Good Friday.
Yeah, just start your weekend a little bit later. I'm just dedicated. I want y'all to pass. So that's another part of this, you know. So sometimes we have to put in some overtime. Unless you want it today. And given some of the homeworks that were sent to me with nothing, with the pages blank, I think I better wait till tomorrow. So you don't get any points if you just send it in to me blank with nothing. No, I guess that does show a little something, but are there any issues on how to do this now? Can everybody do it? Will you be able to do it tomorrow?
So at the bottom, we're just plugging in the numbers.
Okay, what about at the bottom, plugging in the numbers?
I'm saying like what we get from the chart at the top, we just move everything to the bottom and just,
That's correct.
yeah.
Do we need, so you're supposed to be working on this. We'll put a few of them in. So the first one, it says it go, we already said it goes where? Part 3. Excuse me. Goes in part 3. So you can just go down here and plug it in. We're gonna go to part 3. Put 10,000 in right here. It's a type 1. And it's transaction 1. That's all we're doing. Let's do one more. Cash received for car loan revenue, $50,000. It's a type 2, and it goes in part 1. So we're going to go down here to part 1. Part 1. This is journal entry number 2. It's a type 2, and the amount's $50,000. So this chart shows where every journal entry type goes. It shows you. So once you go and determine which journal entry type it is, like cash received, cash revenue received, number 2, that's a type 2. It tells you that the type 2s come in here in part 1. So you look at the transaction, you determine journal entry type, you come to this sheet and it tells you whether it goes in part 1, 2, or 3. You put it in part 1, 2, or 3. Got that now? Any other questions? Let's look at briefly the accounts receivable cycle. And of course, we start on inventories on Monday. We have cash sales in the inventory in the accounts receivable and sales cycle. They go right into the bank. But then we have sales on account. The type 15 is going to the sales, but it's going into account receivable. We collect some of these. Sometimes there's a discount taken. So when we do that journal entry 3, that's going into the bank. Sometimes we have sales, returns, and allowances. So whether cash or whatever, we're going to put them in this account so we can keep track of, one of your controls is how much do I have in sales, return, and allowances. If there's a lot of money in sales, returns, and allowances, I need to check what's going on. Is something wrong with my product? Or my salesman just making a sale, getting a commission, and having the people turn the stuff back in? And then we have some items that are not going to pay. Everybody don't pay when they buy stuff on account. When we have a cash transaction, we debit cash, credit sales. Type 2. When there's a sale on account, we debit account receivable and credit sales. When sales are made on credit, like say some people not going to pay. And so a matching principle requires us to charge off the expense in the year that the sale occurs. So let's assume we have cash sales of 400 and credit sales of 600, and we know that 10% of the people are not going to pay. We debit cash and credit sales of 400. We got this cash. We're not applying that 10% to this. But on the credit sales, we're going to debit account receivable and credit sales. But then if you don't do anything, you're going to show revenue of 600,000. You're going to pay tax on the 600,000. And you won't have that much money. And so you're going to come in and say, okay, 10% of these are not going to be paid. So I'm going to make an adjusting entry, tax 16, debiting bad debt expense and crediting the allowance for bad debts. And so when I do my balance sheet presentation, it's accounts receivable less the allowance. And so my net receivables is $540,000. Are there any questions? Because you have this on the study problem, those of you who have the extended study problem. Are there any questions on how we do this? We create the allowance account because we don't know who's not going to pay. Now, once we found out that John Doe is the person who's not going to pay, we debit the allowance and we credit account receivable. So the allowance account is set up so we got all these people in here and we don't know who's not going to pay. Once we determine it, then okay, we know who's not going to pay. So we debit the allowance and we credit account receivable, and that writes that account off. So when you don't pay a bill, eventually they credit your account and write it off. Okay? So that's the percentage of sales method. And sometime we'll go through and age the accounts to get an even more accurate picture of it. That is how many of the sales are 30 days, 31 to 60. And the longer something is outstanding, the higher the probability is not going to be paid. The longer it's outstanding. So we can come up with it that way also. But most times, rather than do the aging, most people are going to just say, let's take a percentage, 10%, write it off. Are there any questions? Okay, before we hit inventories on Monday, we'll go through long-term assets and depreciation again, make sure you got that down. So we'll spend about 15 minutes on that. And then once we spend 15 minutes on that, we're going to begin to sell shoes, and we're going to see who can sell some shoes, who can run a shoe store there, degrees and everything. Any questions?
I have a question, but it has nothing to do with the assignment.
Oh, what's your question? It has nothing to do with the assignment. What's your question?
Oh, it's about my liabilities and owner equity. Do I add the earned income or no? I mean, unearned income or no to that section?
Unearned income is what kind of an account?
It's a liability. I know what kind of account it is.
So it has to go with the liabilities.
Okay, I need you to stay on after this call.
Okay.
Take the
I
answer.
got one more question about what we just did. So the ones that we scratched out, where do we show for it? We don't do we have to show for it on the bottom chart or not?
No, we do nothing with those. That's why we scratched them out.
So as long as it's above 11, we just scratch it out and that's the end of it.
That's the end of it. That's correct.
Okay.
Anybody else? How we coming, David? Still there?
Doing good. Just finishing it up.
Okay. So yeah, David had his homework in, looked correct, and he's knocking this out. How we coming, Zalandra?
Good. I guess.
You guess. Wait a minute. You gotta be like Trey Young. You gotta be able to put that ball in the basket. We got on Atlanta today.
Huh? You said I'm not in Atlanta today?
So what?
You said I'm in Atlanta or I'm not in Atlanta?
Dave has his. I know you in Atlanta.
No,
Dave,
I'm not in Atlanta this morning.
where are you?
I'm in Houston.
Oh, you're in Houston. Come back to Houston. You couldn't stay away. Okay. Dave has this Atlanta hat on, so that's why I said that. So you decide you leave all those distractions in Atlanta and come to Houston.
Yeah, it was time.
Okay. So Effie, how you coming?
I'm finishing up right now.
Okay. Raquel.
Pretty good.
Oh,
Just
okay.
hanging in there.
Hanging in there. Yeah, just go ahead and follow through. Okay. So on tomorrow, there'll be two parts. One will be the theory and the adjusting entries. That's a short part. I might make it all multiple choice since y'all complaining about Friday. So it won't take that long to do. Then you'll do the second part, which is a cash flow problem, but you just do that and have it end by 6 o'clock. Does that sound okay for y'all's weekend?
That
Yes.
sounds good.
So
Sound
y'all
good.
class an hour because I felt Friday would be better than Thursday to do it. I just kind of felt that way. Okay. So we're getting toward the end. We finish next Thursday, so we're trying to get these points and be where we need to be then. Okay. Okay, so everyone can leave now, and I'll talk to Dominique. See what my future CPA is up to.
I'm muted. I'm sorry. Okay. So I basically finished all of my journal entries, all 78, right?
Mm-hmm.
For this number 78, it was the federal tax. So I went back and I did the income tax based off of the net income before I even did the federal tax income problem, like with all of the assets or whatever. I mean, not assets, but expenses.
Correct.
Everything totaled up when I did that. Even when I went back and added the federal income tax that I got, that amount, even when I went back and added that, everything added.
But once
correct.
you make a journal entry, you're going to be in balance. You did your inventories?
Yes, that's what I'm saying. Everything balanced out on the balance sheet. But when I go down to the assets, for the allowance for doubtful accounts, I made that a negative number on my balance sheet.
Correct. You
And
subtract it
then
from
for the
receivable.
accumulated depreciation for auto and the accumulated depreciation for equipment, I also made both of those negative.
So you subtract them from the related account, just like we showed. So it's going to be account receivable less the bad debt.
Wait, what?
Okay.
Yeah, okay. I got the accounts receivable, and then I got minus the allowance for doubtful accounts.
Correct.
And then for my long-term assets, I have land, auto, and then I have the accumulated depreciation for the auto, the equipment, and then the accumulated depreciation for the equipment.
You subtract. Okay, that'll work.
But it's not adding up. Only way it added up is when I took away the unearned income on my liabilities and owner's equity. Then it made it both the same amount. But when I add that 3,000 back, it's off again. So I don't really know what the issue is.
Why do you have 3,000? Where does the 3,000 come from?
The 3,000 is the unearned income from,
For who?
let's see what number that was. Oh, it was a lot of them that had unearned income. Okay, so it was a credit of unearned income because I got my numbers 64, 69, 70, and 71 all included unearned income.
So you just got to make sure you got the debit and the credit in the T account for each transaction. Did you leave out one of the postings?
Yeah, that's what I'm saying. Everything came out right. I went back through every journal entry and redid them. Is what I'm saying. That's what I did yesterday, last night. And it's still, and under the liability and owner's equity, I added accounts payable, salaries payable, unearned income, taxes payable, and notes payable. Right.
Yeah. Or maybe the 3,000 is somewhere else.
The only other 3,000 that I have is sales returns, but I don't know where sales returns falls under. Because we have the sales amount at the top of the balance sheet, but we don't have the
Income
sales
statement.
returns.
Top of the income statement.
Top of the income statement. So where it say cost of goods sold,
No,
that part?
sales should be sales less sales return.
Yeah, it say sales and then less cost of goods sold and then gross margin.
Okay. So you can put it as an expense on the income statement too. Sales return.
Oh, okay. I didn't even know that.
Okay.
So because it's a return, oh no, but it was a debited amount, so it'll still fall right here.
Right.
So does that mean, okay, so that means everything is gonna be wrong, because that means that since I'm adding it to my expenses, that means that my net income will be different. So I will have to go back and redo problem 78, right? Because 78 was the federal income tax for 20%.
Correct. Yeah, you have to redo that.
Okay, I was just trying to make, okay.
But
Okay,
you can see your balance now because you didn't put the 3,000 anywhere for the return.
Yeah, for the reimbursement of the check.
Right.
Yeah.
So that's why you're off. That's the 3,000. So it was not the per se unearned, but the reimbursement amount. So how'd you like that problem?
Oh, it was really easy. Actually, all of my journal entry problems came out to be really simple once I actually learned how to do it or what journal type it was. I mean, I still don't know if we use the write-off of uncollectible accounts. So that's what actually made me use the sale return and stuff like that, because I didn't know what account to use for number 18, well, for transaction type 18.
But we didn't. I don't think we wrote off anything. We estimated what it was, but we didn't come to okay. This one is not uncollectible. I don't believe.
Okay. So yeah, then that makes sense, because everything else I just figured it out. For the federal taxes, I debited federal tax income expense, and then I credited the taxes payable.
That's correct.
Yeah, so I just figured out which one goes where for the rest of them.
So you did your weighted average inventories?
My who? For the shoes that you added on?
Yeah.
Yes, my inventory, the total came to it debited 180,000 for 73, 74, and 75. It was real simple. One of them.
You got to. So you had a cost of goods sold.
Cost of goods sold. I'm supposed to have a cost of goods sold.
We'll talk about it on Monday.
No, let's talk about it right now.
You want to talk about it now? Okay.
But if it's the shoes, right? Wouldn't it be inventory? I mean, debit inventory and then credit cash? For however much the shoes was?
I don't know about that now. Let's see. That's why I asked you about your inventories.
Yeah, because mine says purchased 3,000 shoes at $10 each. So I just got $30,000.
But then you buy 3 times?
Yeah, so the first time I got 30,000. The second time it was 3,000 at $20. So I got 60,000, and then the third time I got 90,000.
Well, how many did you sell? You didn't sell them all, did you?
Well, it didn't say let me yeah, it doesn't say anything about sell. It just says purchase. It say all of the question says purchase 3,000 shoes at $10 each. Then 74 says purchase 3,000 shoes at $20 each. And then 75 says purchase 3,000 shoes at $30 each. Oh, wait, which one though? Because it's one say sell on account 2,000 pairs of shoes at $100 each. What I did for that? Oh, I used AJE4 for that, and I did accounts receivable and sales. Was that wrong? I did type 15 for that. That was wrong.
Well, you said you wanted to see.
That's what I'm
All
saying.
right.
So was that?
When we sell inventory, that's going to be 3 transactions. When we buy the inventory, we debit inventory and credit accounts payable. When we sell it, we debit cash, account receivable in this case, and credit sales. But we also have to debit cost of goods sold and credit inventory. So you're going to have a cost of goods sold amount.
Okay, so the first 3 problems that's telling me that I'm buying the shoes will be the part 1, the inventory with accounts payable.
Correct.
Right?
Mm-hmm.
And then the one that says cash sales of 2,000 shoes at $100 each will be the accounts or cash receivable for sales, right? The
Correct.
second. And then the sales on account would be the cost of goods sold.
Mm-mm.
Wait.
So you see, this is how the income statement so be looking: sales, less sales return, net sales, less cost of goods sold, gross profit, less operating expenses, net income. So that's how your income statement's supposed to be looking. Okay, so let's assume that you bought 1 pair of shoes for $20 and you sold them for $50. Okay.
Mm-hmm.
So when you buy the shoes, you debit inventory, credit accounts payable $20. When you sell them for $50, you debit account receivable for $50 and credit sales for $50, or cash, whichever one it is. But you also got a debit cost of goods sold and credit inventory because you no longer have those shoes. So the way your income statement looks like is the sales less the cost gives you the gross profit. So you're selling shoes to get a gross profit.
So I'm gonna have to do that for wait a minute. Okay.
Just
So
for the transaction for the sale of shoes.
so for the first 3 then, let's say that they purchase shoes.
Nothing. You just make that journal entry you made.
Okay.
But on that one sale, you got a debit cash and credit sales. Then you got a debit cost of goods sold and credit inventory. Because it's what you're looking at is how much money did I make when I sell the shoes? So
Yeah,
if
but
I
what I'm saying is
so if I
I
sold
have
1 pair of shoes, it cost me 20, and I sold it for 50, I made 30.
mm-hmm. So okay, I'm confused. So basically, the cash sales of 2,000 shoes at $100 each, and the one that says sales on account of 2,000 pairs of shoes at $100 each, is the AR or cash over sales, and then the cools over inventory.
That's correct. That's the 2.
Okay.
So you got two sales. So you got three purchases. So
Mhm.
you'll have this 3 times. Then you got two sales, one for cash and one on account. But every time you sell something, you got to come up with the cost.
Mhm.
And you didn't sell it all. Are you gonna be able to run this shoe store?
So basically, okay, 3,000, 3,000, 3,000. So basically in total, I'm gonna have 9,000 shoes. Is what you're saying?
You bought 9,000, but how many did you sell?
4,000. Because I
Okay,
sold 2,000 in one problem and another 2,000 in another problem.
so you got to get the cost of the 4,000.
Okay. Okay, that makes sense.
I tell you.
Okay. This is okay.